So under the financial accounting and controlling, in vendor master company code data, step number 2, payment transactions. Under the payment transaction, the first field is payment terms. What is meant by payment terms in our SAP vendor master? Payment terms define when and how a vendor must be paid. They control due date calculation, cash discount eligibility, payment blocks and unblocks, payment run behavior under F110. Payment terms affect all vendor invoices automatically. How payment terms work in SAP? The payment terms calculated the baseline date, then SAP adds the number of days to calculate the due date. For example, payment terms is 30 days, baseline date is 10th January 2025, the due date will be 19th February 2025 based on 30 days payment terms. Cash discount examples. In payment terms, 2% cash discount if paid in 10 days, otherwise you need to pay the entire invoice amount in 30 days. Let's say invoice amount is 1 lakh rupees. The payment within 10 days, you can able to pay only 98,000 rupees. After 10 days, you must pay the 100% amount 1 lakh rupees. SAP automatically performs this during payment run in F110 T code when you are running the APP automatic payment program run. Which payment terms should you select? Depends on your agreement with the vendor. Let's say vendor gives 30 days credit, payment terms 0002 for 30 days. Vendor wants immediate payment, then you can use the payment terms 0001 immediate payment. Give yearly payment discount, the payment terms 2% discount in 10 days and net in 30 days. Concessions or subcontract vendors for long credit, payment terms it should be 60 or 90 days. So like this, based on the different requirement, different conditions, you can create different payment terms. So and based on the specific vendor requirement, you can select the payment terms. The important notes: the payment terms from PO override vendor master. If blank in invoice, SAP takes from vendor master. Change affect new documents, not old ones. Whatever the changes you are going to make it will be affect the future new documents. There is no any impact on old document which we posted already in the SAP system. So the next one is credit memo payment terms. What is meant by credit memo payment terms? Credit memo payment terms in SAP define how refunds or credit memo issued to a vendor or customer are due for payment. This field is used specifically for credit notes, not for normal invoices. Where it is used in vendor master under the company code data tab, you can go to vendor payment transactions. The purpose: credit memo payment terms override the regular payment terms only for credit memos. Example: normal payment term is 30 days, credit memo payment terms immediately, due instantly. So if you post a credit memo, SAP will use the credit memo payment terms, not the invoice terms. This helps ensure refunds and adjustments are settled correctly. Why different payment terms? Credit memos may need to be cleared immediately. You may want a different cash discount logic for credit memos. Helps in automatic payment program F110 for correct due date calculation. If you want, I can explain how this interacts with F110 clearing or payment term configuration in OPB8. So the next field is tolerance group. Tolerance group in SAP for vendors and customers defines the limit within the company within which the system can post automatic differences during payment process. Purpose of tolerance group: it controls payment differences automatically posted, the number one option. How much difference SAP can post without manual intervention during incoming payments for customers, outgoing payments for vendors. Number two, cash discount permissions. Whether a customer or vendor is allowed cash discount after payment term expiry, partial cash discount. Number three, underpayment and overpayment limits. Defines maximum overpayment SAP can accept, maximum underpayment SAP can write off, maximum percentage difference allowed. So example, if the tolerance group allows underpayment 200 rupees, overpayment 150 rupees, cash discount tolerance 3%, then during the payment, if the customer pays 100 less, SAP writes off automatically. If customer pays 120 extra, SAP accepts as overpayment. If customer takes 3% extra cash discount, SAP will allow automatically based on this configuration. So you can use the OBA3 T code to create this particular tolerance group for customers and vendors. The next field is check caching time. Check caching time in SAP is used to define how many days after issuing a check the system should expect it to be cached. So where you see it under the vendor master company code data, go to vendor payment transactions. Then you can see the field check caching name. Check caching time. The purpose, when you make a vendor payment through checks, SAP needs to estimate when the check amount will actually leave your bank account. This field helps SAP delay bank accounting clearing. The payment stay in an intermediate clearing account for the number of days you enter. Improve cash flow planning. The system calculates cash flow, cash outflow date, liquidity forecast, payment proposal timing. So these are all the system will calculate. For example, if check caching time is 3 days, vendor payment run F110 issued check on 10th November, SAP assumes the vendor will cash it by 13th November. Bank account clearing postings will expected on only 13th November. The typical use cases, countries where the check payments are common, US like and India, organizations that issue post-dated checks, companies needing accurate liquidity management. The next one is payment reason. Payment reason in SAP is used to specify the purpose or justifications of the payment that will appear on payment documents, bank files and statements. Where you find it under the company code data, payment transactions, you can see the payment reason. So also it is appear in customer master for incoming payments. Purpose of payment reason, it helps SAP and banks understand why the payment is being made and provides clarity in bank transfer like NEFT, RTGS in India and SCPA in EU. The payment reason appears in number 1 bank statement, number 2 payment advice, number 3 vendor bank notifications. Then automatic payment run in F110 documentation. When SAP generates the payment file, the payment reason is included in the payment medium. So legal and statutory requirements. Some countries mandate that every bank transfer must include a payment purpose. Example of payment reasons: INV invoice payment, ADV advance payment, REB rebate payment, REF refund, SAL salary, tax payment. These are all the examples. The example scenario: vendor invoice value is 50,000 while creating vendor master or during F110 run. Payment reason INV, bank file shows payment reason invoice payment for vendor 30001 INV. Vendor understands immediately. Configuration for this payment reasons under the financial accounting, accounts receivable and accounts payable, business transactions, outgoing payment, define payment reasons. So you can create custom payment reasons, codes and assign descriptions. The next field is check double invoice. So when this indicator is activated, SAP automatically checks whether the invoice with the same key fields has already been posted. SAP compares vendor number, invoice date, invoice reference number. Usually it is invoice number only and invoice amount. So, and the purpose is this prevents duplicate vendor payments, incorrect accounting entries, fraud or accidental double posting, manual review effort. So these are all the preventions, the usage of check double invoice field. How it works? Simple example. Vendor submit invoice. The invoice number is 1001 50,000 rupees. You post in Miro or FB60. Later someone try to post the same invoice 1001 again. Because the double check invoice is active, SAP stops them where it is controlled. There are two places for duplicate check control. One is vendor master. This field turns the check on off for the specific vendor. In system configuration, go to material management, financial accounting, invoice verifications, set tolerance for duplicate invoices, or you can use the T code directly, OM or DC. So configuration defines which fields SAP should compare, and system will generate error or warning message behavior. Important notes: if the vendor uses the same invoice number every month, you may deactivate this field. Very rare cases used to happen. Best practice, always keep it on for all vendors. The next field is payment methods, where you maintain it. In vendor master, company code data, payment transactions, you need to maintain the payment methods. The purpose of payment methods: you can enter one or multiple payment methods. Purpose of payment methods: this field controls which payment types are allowed for this vendor. For example, bank transfer only, check only, no cash payments, international payments allowed. Which invoices are considered in F110 payment run. If an invoice does not match the payment method allowed for the vendor, SAP will not pick it up. Determines the format required for payment files. For example, NEFT, RTGS, SEPA, XML, BACS. These are all the format required for payment files. The next field is house bank. Purpose of house bank: it tells SAP from which bank account the payment should be made. When paying this vendor, select the correct bank during payment run F110. SAP will choose this house bank for vendor payments. Assign the right account details like a bank name, account number, GL bank account, check lots, payment medium file structure, and control which bank account is used for different vendors. For example, local suppliers, HDFC Bank, international suppliers, Citibank, high value vendors, ICICI Bank. So first of all, what is meant by house bank? A house bank is your company's bank stored in SAP with bank key, bank account, account ID, currency, account GL mapping. You can have multiple account IDs under the same house bank. So let's say under the HDFC Bank, you can able to create current account, salary account, vendor payment account. To configure this bank account, you can use the T code F512. So the next field is payment block. So what is meant by payment block? The purpose of payment block: the payment block is used to stop SAP from paying a vendor or a specific invoice, prevent automatic payment. Invoice will not appear in F110 payment proposal, which is nothing but APP, automatic payment programming proposal. And then manual control, used when invoice is under dispute, goods not received, GR, IR issue. GR means goods receipt, IR means invoice receipt, and wrong price or wrong quantity, vendor reconciliation needed. Due to this reasons, you can control the invoices from the APP by using this payment block. And financial audit control stops unapproved invoices being paid. These codes depend on company configurations. So the configuration menu path: under the financial accounting, accounts payable, go to business transactions, outgoing payments, and you can define the block key descriptions. If block is for vendor or invoice, usage in F110. Vendor level versus invoice level payment block. There are two methods to block an invoice. One is vendor level, another one is invoice level. First one is vendor level. Blocks all invoices for that vendor, usually when vendor is suspended or inactive. Invoice level blocks only the specific invoice, most commonly used type, due to various issues. So these are all the common payment block codes. A means blocked for payment general block. B blocked due to missing GR goods receipt. C quantity inspection block. D blocked by user manual or block for release workflow. V vendor level payment block. Okay, these are all the commonly used codes. Anyway, based on the client requirement, you can define and you can use it. Then payment method supplement. The purpose of payment method supplement, it further classifies or controls how a payment method behaves. This field is used when one payment method has multiple variants. Example, NEFT or RTGS under the same bank transfer, regular check versus special check format, domestic transfer versus foreign transfer, special bank selection rules, priority payments, different payment medium formats. So these are all the examples for payment method supplement. So there are two scenarios. The first scenario, bank transfer by payment method T, 01 NEFT, 02 RTGS, 03 IMPS. Like this you can define. And example 2, scenario 2, by check mode you can enter the payment method C. A is normal check, B is courier check, C is high value check. Like this you can differentiate the payment method supplement. So the next one is grouping key. Grouping keys in SAP is used to automatically derive other fields during document posting such as payment terms, payment method, payment block, house bank, short key, assignment field. It helps SAP fill these fields automatically based on the predefined logic, reducing manual entry. Purpose, grouping key is used for automatically deriving values during invoice postings. For example, based on posting date, the system can automatically generate assignment numbers or fill due dates. Second one is automatic assignment field generation. A common use is, let's say, Z01 assignment equal to document number, Z02 assignment equal to posting date plus vendor number, Z03 assignment equal to fiscal year plus posting dates. The next one is standardization of accounting data. Ensure consistency for reporting, customer/vendor analysis, automatic clearing. The configuration menu path, under the financial accounting, accounts receivable and payable, go to business transaction, grouping keys. There you define grouping key ID, what field values SAP should derive, assignment, terms, payment data, all the informations you need to update. So the key points, grouping key saved date entry, grouping key saves data entry time, helps maintain consistent document references, works only if required configuration in IMG. You can use different grouping keys for different vendors. So these are all example of grouping keys. 001 assignment equal to posting date, 002 assignment equal to document number, 003 assignment equal to vendor number plus posting date, 004 for terms based on GR rate, 005 due date adjustment based on the calendar. So like this you can use different type of grouping keys based on your client requirement. The next one is alternative payee. Alternative payee in SAP is used to when payments for a vendor should be made to a different vendor or third party instead of the original vendor. The purpose of alternative payee, it tells SAP, do not pay this vendor directly, make the payment to another specific vendor. This is commonly used when, number one, parent company receives payment on behalf of subsidiaries. Example, vendor ABC distributors, payment should go to ABC corporate head office. So here ABC distributor is a subsidiary, ABC corporate is the head office for the, let's say, parent company. Number two, agents or brokers receive payment. Example, payment for goods goes to a sales agent. And vendor has multiple bank accounts managed separately. Vendor has outsourced collections. So types of alternative payee, there are three ways SAP supports. The first way, vendor level alternative payee, defined in vendor master, always pays to the alternative payee vendor. Number 2, one-time alternative payee specified while posting an invoice in FB60 or Miro. Only that invoice is paid to the different vendor. Number 3 option, exclusive alternative payee, company code level, configured so that only the alternative payee is allowed, original vendor is never paid directly. So you can set up 3 levels. One is for invoice level, another one is for vendor level, another one is for company code level. So these are 3 ways you set up the alternative payee. For the configurations under the financial accounting, accounts payable, business transaction, maintain alternative payee, you define which vendor can be alternative payees if exclusive payment is allowed. Important notes, if blank vendor is paid normally, if alternative payee is blocked or inactive, system may give payment run error, appears on payment advice and bank file transparency. The next field is bill of exchange limit in local currency. So bill of exchange limit in local currency in SAP is the maximum credit limit allowed for a vendor when setting invoices using bill of exchange. It is maintained in the vendor master. The purpose, this field controls maximum exposure allowed for a vendor. SAP checks this limit when posting invoices, running the automatic payment program F110, posting bill of exchange settlement. If the limit is exceeded, SAP will block further bill of exchange posting for that vendor. Example, vendor has a bill of exchange limit is 5 lakh rupees. Bills already issued for 3,50,000, remaining available 1,50,000. In a new bill of exchange post is 2 lakh, SAP will reject or block it because the limit exceeds the 5 lakh. So what SAP tracks by using this bill of exchange? When bills of exchange are used, open exposures is tracked automatically, balance reduces as the bills are cleared and paid. For the configuration under the accounts receivable, accounts payable, go to business transactions in bill of exchange. Settings cover posting rules, dunning rules, payment configuration and limit behavior. So the typical use cases used in countries and industries where vendors allow deferred payment via negotiable documents. Bill of exchange are common in France, Italy, Spain and some Asian markets. Used to control financial exposure, prevent exceeding agreed credit limits, maintain credit discipline. These are all the controls used. The next one is indicator clearing between customer and vendor. In SAP allows automatic netting or clearing of open item between a business partner who is both a customer and vendor. The purpose, if the same business partner is customer in AR accounts receivable, vendor in accounts payable AP, this indicates allows SAP to offset receivables and payables against each other automatically. So, for example, the role customer sales invoice, the balance is 50,000 receivable. The role is vendor purchase invoice, 30,000 payable. With this indicator on, SAP can clear how it works. The condition, same company code, customer and vendor master must reference each other. Vendor master must store the related customer number. The customer master must store the related vendor number. Clearing indicator must be active in both master datas. So how to configure it? Go to financial accounting, accounts payable receivable, business transactions, clearing cross company code clearing between customer and vendors. The benefits, reduce manual reconciliation, lowers outstanding balances, useful for group companies, employees or partners who buy and sell. The next field is single payment. Meaning single payment is an indicator in SAP that ensures only one payment is generated for all open items of a customer or vendor during a payment run instead of multiple payment documents. So the purpose, if this checkbox is selected, SAP groups all due invoices into one consolidated payment instead of issuing multiple checks, transfers or payment documents. Helps reduces bank charges and simplify reconciliation. The typical business use cases, vendor who request a single consolidation payment statement, and customers where payment receipts must be merged into one entry, companies wanting to minimize transaction charges. If the indicator is not selected, payment program may generate multiple payments depending on items due, dates, and other settings. The next one is indicator send payment advices by EDA. This means the indicator tells SAP that payment advice notes should be sent electronically via EDA. EDA is nothing but electronic data interchange instead of sending them by print, email, or post. So, what is payment advice? A payment advice is a document sent to a customer or vendor showing which invoices were paid, how much was paid, deductions, discount, etc. It is usually issuing during an automatic payment program under F110. What this indicator does? If this field is ticked, SAP will generate payment advice as an ADI message. So no paper or printout version is created unless configured separately. The vendor or customer must be set up for ADI communications. Example, IDOC like a PX or 2002. If this field is not selected, the payment advice is produced normally, printout, email, etc. The business use case. This is typically used for the large companies processing high invoice volumes, vendors or customers who want automatic digital updates, integration with ERP to ERP communications. The next field is payment clearing group ID, meaning the payment clearing group ID is a field used in SAP to group open invoices. So for clearing purposes during payment runs or manual clearing. Here I can say open invoices like invoice, credit memos, etc. It helps SAP decide which item should be cleared together based on grouping logic. Purpose, it allows the system to identify items that belong to the same payment group, clear items only within the same group, prevent mixing unrelated items during clearing. Example, if a vendor supplies raw materials, services, you can assign payment clearing group RM for raw materials invoices, payment clearing group for SRV for service invoices. During payment run F110, raw materials invoices cleared only with RM items, services invoices cleared only with the SRV items. Benefits, better control in clearing, prevent incorrect mixing of invoices, helps in matching and reconciliation, useful in grouped or complex payment process. The next field is indicator send payment advice by XML. Meaning this indicator determines whether the SAP should send payment advice documents in XML format to the customer or vendor. Payment advice is a document that tells the business partner which invoice were paid and how the payment amount was allocated. Purpose, if the indicator is set, SAP will generate and send the payment advice in XML format, usually through email or integration middleware, for example PI, PO or CPI, or EDI XML messages or bank communication channels. Example scenario, a vendor requests the payment advice must be sent in XML for their automatic reconciliation system. When this indicator is checked during the payment run F110, SAP will generate XML payment advice, send it electronically, not send a paper or PDF version unless configured additionally. Why is XML used? Because it is machine readable, easy to integrate with the third-party systems, used extensively for automation and electronic data interchange. If the indicator is not set, SAP will use the defined methods such as email, PDF, printout, EDI message if separately configured. So the next one is prepayment relevance in supplier master, meaning prepayment relevance is a field in the vendor or supplier master that indicates whether a vendor involved in advance payment before goods or service are received. If this indicator is set, SAP treats the vendor as requiring down payments, which can affect how postings and payments processing work. The purpose, a company must pay a vendor a portion of the amount before delivery. Tracking and clearing of the advance payments must be controlled. financial reporting needs to identify such vendors separately. So what happens when it is active? It set a prepayment relevant. Down payments to this vendor are posted to special GL accounts. SAP may require prepayment informations during invoicing or PO processing. Reporting and payment programs can filter such vendors accordingly. The business examples use this option when the vendor requires advance payment before shipment, initial deposit before contract execution, stage-based payments, for example 20% upfront, 80% later. Common in industries like construction, heavy machinery, import requiring project-based services, generally used the prepayment or the advance payment options. If the field is not activated, SCP will treat the vendor like a normal supplier and no special GL routing is applied. Payment process only after the invoicing. This is standard flow. Fine. So we discussed elaborately all the fields coming under vendor payment transactions in company code data tab. Thank you. We'll see you in vendor correspondence.